Welcome traders, this is a recap for February 10th, 2012 for tradingprobability.com. Coming for you here Friday, last day of the week, last day of our videos for the week. This is our first week of the videos, so hopefully you guys are enjoying them, learning a little bit, getting to know our process a little bit, and hopefully we're getting a little bit better on the old videos here and improving our service for you guys. But anyways, another flat day today, not a whole lot of opportunity again, and a lot of times with this sort of trade, guys will overtrade. They'll look for trades when there aren't any, and so a lot of times the best trade of the day is to not even trade at all. And we didn't have a trade until about the final hour. We ended up taking a long into close. Unfortunately, shut it down a little too early after this last initial spike. But we ended up, getting a decent position, decent gain on the day, and we'll go through our process, our probabilities, and show you guys sort of what we're looking at. So initially, gap trade, we had a big overnight gap. We don't even really pay attention to the news, but we looked, and it was about the grease stuff, which we won't get into what we think about news and markets. But anyways, we were opening up big below yesterday's range. But the biggest thing is we were still opening up above that those excess lows from, I believe it was Tuesday or Wednesday. And so coming into the day, we had that 31.5 point for reference for longs. All right, we're always looking to buy weakness in this market right now until until that trade doesn't work anymore, until we get a couple losses in a row. We're still going to be on that trade. And so we came in looking for longs again. Obviously, we weren't going to fade this gap outright. We come down here, you see 28% fill rate, 52% win rate. So we have a little bit of edge. We might close higher. Profit factor of 0.8. So this, there's no point really unless something crazy, unless it's options expiration. If we're gapping outside our range, the best trade is to always kind of let it bounce form to see where we're at. We did have a little bit of an edge higher. You see 57%. Time frames higher, meaning we break the 30-minute high higher in the next 30 minutes. We have a +4 first handle move. We're again seeing fade a four handle move go with a -4 off the open. So a lot of times in that, we like to have this four handle bias just to sort of, if we get some energy, to see what that kind of dictates for the rest of the day. Because a lot of times when you get gaps, you'll get weak traders in the opposite side of the gap try to lock in profits. You'll see gap faders get initial gains and try to lock some in. So there's a little bit of that battle in that first 30 minutes, and so those can kind of give us some clues. But basically, overall, we're seeing our downside target was 42.75. Obviously, we're opening below it, and we had an edge to close below it for the day. And so overall, with these large gaps, these sentiment changers, it's most of the times to go with them. And so basically here we had looking to see what the first 30 minutes would do, and then just basically go on hunt for imbalances, any kind of weakness. And basically what we saw off the open was just a whole lot of nothing. We traded up about 2 handles, traded down about 2 handles. We got a little bit of a sell imbalance, a -9,000 at 9:55, so right before that 30-minute time period. I think there might have been a news news announcement there, but nothing really going on. We didn't get outside of this Keltner. We didn't get a whole lot of energy on the downside. Had this reversal off a pretty weak low structure. And so, just wasn't a whole lot of opportunity there for us. Looking at the initial balance, so I think we kept within about a 5-handle balance today, which is very rare with such a large gap down. Usually, those large gap downs, you're going to get a quick price rejection, trade up quite significantly, or you're going to get a lot of new shorts coming in, piling in, and you're going to get some downside. So I think it's just the fact that we're gapping within that excess, and there's just a lot of that support in there, and there's just kind of a battle between everyone. It was just kind of a pretty overall balanced trade for the first hour. So we kind of signaled in on no energy. The edge was to break lower. Low break is mixed. It wasn't really a 52% win rate, 1.68 profit factor. It's not the most strongest. It's decent. It's nothing to get too crazy about, especially with current market conditions. That's more likely a fade. We'd like to see that above 60, 65% to get really have a lot of conviction short. So we had edge to break lower. The low break is mixed. High breakout is stronger. So you can see here 81% win rate. If we do break 45% of the time, 81% win rate, 3.59 profit factor, edge to 43. And so those, so if we do break the highs, most likely we're going to close above 39, trade up to 43. We had small initial bouncing release to rotational, double distribution. If we did break lower, we had 29 to 31 in play, which would take us below that excess, and then 40 to 43 if we break higher. We had tick was extremely bearish for that time. I don't even think within that first hour we traded above 500, and so we kind of it was basically sort of an oversold, but not really with any kind of indicators. So basically, we were saying look for some higher ticks to balance out. So just the market was sort of oversold, just kind of based on the gap, and so we thought that there would be a little bit of a up move to kind of balance everything out. And so it was just it just sort of happened, just balanced out, and basically generally balanced out for surprisingly the next almost 2 hours until we had this little fake break here. We get a sell side imbalance come in, so that was basically sold by everybody. That new high print got sold pretty heavily. Overall volume wasn't very high on it though, and so a lot of times when you see those sell imbalances off of new highs, that's a go with trade. The trade would be, we generally like to look for another higher high off of one of these sell imbalances, and so we got it obviously within the lunchtime trade, so we didn't trade it. But a lot of times, look for those higher highs, and it took a little bit longer just because it's a lunchtime trade. Again, we aren't a big fan of lunchtime trade, lunchtime analysis of volume, because you can see here we traded 4,000 contracts right there, and so it's just a little hard to get a grasp on. But that ended up being a decent little reversal. And so basically after this break, going into lunchtime, going into kind of the end of the day, our setups, we were looking for below the 35 area to get long. And so basically what we saw here, we now have, and obviously these with such a late break, such a small consolidated day, not a whole lot of sample size to draw off of, but either way we had a 0% chance, which just sort of tells us that the lows are going to be strong. We don't really have a very strong breakout trade, most likely not going to close above the highs. We have edge to close down still, but then we have this win rate of 60% to close above 36. So it was looking like most likely we're going to close somewhere within balance 37 to 39. And so the opportunity wise, we didn't want to get long unless we had 3 or 4 handles of possible target. And so we were looking, so here we go, overall bullish above 31.75. So even if we did somehow come back down and tick lower, we still want to be buyers of that, as long as we stayed above that excess high from the other day. So we had bullish above 31.75 and below 35, bearish above 41. All right, so we're basically looking to, and that was the edge of this break. So the edge of the break was 41. I don't think we quite got it. I think we came up here, hit 40.25 before this reversal. So that was sort of our edge and opportunities. At 37, at 38, at 39, we just don't have a whole lot of opportunity one way or the other. And so we were hoping that we're going to get 35 into close, because obviously we want to be with trend, because we thought shorts were going to have to cover at some point, because any new shorts today, they didn't get a whole lot of ground gained. They're not going to want to be long over the weekend, and so that's sort of how we went into it. So we got here, we get a little bit of a sell and bounce, but you can see we're getting in this Keltner channel, so we're outside of the deviations here, and so generally snap back. So we like to see a slightly lower low. Didn't get our lower low. We built this little base here. This starts to look like a pretty obvious stop sweep. We get it down again right at the Keltner, right within our range. We basically had orders splayed out from 34.5 down to 32.5 to try to take advantage of trade from here down to within that excess. The probabilities were strong that the lows were going to hold, so we wanted to make sure that we had some orders just in case those lows did hold. And so we got a decent position size right here, and we squawked it out in real time too down here for you. In our comments, just make sure you go back and look if you want to kind of read up on more on our process. But that was sort of our trade. And so we were asked, well, what was the trigger for it? And it was basically risk to reward. The fact that these lows were strong, the fact that we thought 31.5 was strong. And so we got a little bit of this excess here. We hit our Keltner channel, slightly lower low, and so we just wanted to get something going on in the close. Thought shorts would have to cover. Shorts covered. We had this weird little spike. We ended up getting out there. We had our 37 to 38 target initially, and then as always, right on cue, shorts cover right at close, buy on market, boom, new highs. Shorts go home, licking their wounds again over the weekend. So, again, overall, limited trade today, limited trade yesterday, but you know what, it's all right, because we keep plugging along. We're not giving away gains, especially not giving away money short. So in this market, I know some of you don't think it makes sense why we go up every single day, but you need to stop worrying about why it's going up every day and start taking advantage of it. All right, and until it doesn't. And so it's just something you don't need to understand. You don't need to have to explain it. Just observe what the market's doing and take advantage of it, make money off it. And so that's what we try to do every day. So as long as they keep doing it, we're still going to keep going long and hoping to catch shorts and close. So overall today, we like we said, limited trade, but again, pretty good. So going into Monday, pretty much it looks about the same. Look for strength, fade weakness. All right, same thing here. Breakouts, high profit factors, low win rate, low profit factors, high breakouts. All right, and so you can see here, even at the target shorts, looks like you want to go with them. At the target longs, you go long. So edges to break the highs and close above the highs. Edges to close up, we have close above the open, +4 off the is the first move. Good win rate on gaps, no edge on the fill rate. So it looks like if we're gapping lower within range, we're going to want to get long. Anything else, it's going to be a little bit questionable. And then we have 43.25 to trade, and most likely we'll close above that. Go with a +4 probably, fade a -4. And so possibly a little bit more of the same, but again, Monday's gap is going to tell us a lot. So it's just kind of up to how we open. So enjoy the weekend. Hope everyone had a great week, and hopefully we'll see you again on Monday.